The quantity at risk is the hundreds of millions of dollars. There is a horrible plot brewing in the shadows. Seriously, I still can't believe this is transpiring. Something very disastrous might happen in the next day or two. We won't dally any longer. This video is of the utmost importance. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the curve in the crypto industry, subscribe. To get more SHIB news, be sure to click the like button. For cryptocurrency investors, the last several weeks have been nothing short of a wild trip. Another collapse rocked the market, leaving many bewildered just when it seemed like things were starting to turn around. As prices fell again yesterday, it sent shockwaves across the cryptocurrency community. How, however, has this crazy trip been propelled? You may recall that the first ever exchange-traded fund, ETF, for cryptocurrencies, namely Bitcoin, was approved 2 months ago, allowing a deluge of investment into the cryptocurrency market. A panic ensued as a result of this daily infusion of cash, totaling hundreds of millions of dollars, dragging prices to all-time highs. Particularly noteworthy was Bitcoin's stratospheric ascent, which shattered the $70,000 barrier and beyond. This is of utmost importance. It would be a huge understatement to say that Bitcoin is the most important cryptocurrency at the moment. The movement of other assets, particularly Shiba Inu, is affected by its every action, which causes waves to spread over the whole room. We have seen the rise and fall of Shiba Inu's fortunes firsthand, much like the king of cryptocurrencies, Bitcoin. With Shiba Inu's recent skyrocketing rise, gaining more than 200% in only 1 week, it is impossible to overlook the importance of Bitcoin's influence. This highlights how the crypto market is interdependent and how Bitcoin's progress has affected other cryptocurrencies. But the question remains, what transpired in the last day to cause another fall in all cryptocurrencies? You have raised an excellent point. Investors felt a surge of relief as the cryptocurrency market seemed to be finally settling down. After experiencing the aggravation of constant crashes, a glimmer of optimism appeared as if things were starting to turn around. Nevertheless, this hope did not last. The market quickly descended into anarchy after showing signs of promise. The reason for this is that yesterday saw the highest single-day withdrawal ever recorded from Bitcoin ETF, amounting to an unprecedented $154 million. The dramatic flight from exchange-traded funds set off a chain reaction that caused Bitcoin's value to plummet. Once again, values crashed throughout the whole cryptocurrency market as a result. It's worth mentioning that this situation has happened before. On March 1, a lesser-scale but comparable occurrence took place, but the outflow yesterday was far larger than the ones before it, which made a bigger splash on Bitcoin's price chart. To what extent, however, will the current bear market in cryptocurrencies persist? Why, therefore, did so many people suddenly stop pouring money into Bitcoin ETFs? Am I at my wit's end? Or is there anything else going on here? Who knows? We'll find out. A Twitter user has issued a somewhat well-reasoned warning regarding Bitcoin's approaching entry into a danger zone before to its upcoming jumping. A bleak picture of historical echoes and possible financial slumps emerged from the tweet's mountain of statistical data. Bitcoin will formally reach the danger zone, orange, where previous pre-halving retracers have began, in 1 day, according to the tweet. In the past 14 to 28 days prior to halvings, Bitcoin has conducted pre-halving retraces. Starting 14 days after the halving, this retracement in 2020 was 20% deep. Even while this pullback was brief, it set the stage for Bitcoin's 150-day reaccumulation phase that culminated in the cryptocurrency's meteoric rise. In 2016, 28 days before to the halving, the pre-halving retracement started and was 40% deep. After a total of 8 weeks of this retrace, Bitcoin finally broke out into a parabolic rise. As of last week, Bitcoin was down 11% and is now around 21 days from the halving. This frightening prediction is reminiscent to trends seen before to other halving incidents and implies that Bitcoin might be about to see a major decline. The data is rather bleak, suggesting possible market retracements and extended periods of volatility. Hopefully, you're now coming to the conclusion that I'm correct. As a result of selling their crypto assets in anticipation of a further decline in value, investors are hoping to reinvest at a lower price point. Of course, it's not that easy. In no way. Recently, investors have been selling their crypto assets in anticipation of price declines, with the intention of purchasing them back at reduced rates. However, the market behavior has been contradictory, which is confusing. We are seeing a rise in withdrawals rather than an inflow of assets into exchanges. The common belief in selling high and buying cheap is called into doubt by this perplexing tendency. Nothing makes sense. There should be a dramatic increase in cryptocurrency inflows to exchanges as people try to fulfill their sell orders if they were really planning to liquidate their crypto holdings in the hope of price drops. But the fact is that many are reluctant to part with their investments, as seen by the large outflows from exchanges. Yesterday, an unknown entity withdrew more than 500 billion Shiba Inu tokens from Coinbase, demonstrating that the same bewildering behavior applies to certain Shiba Inu whales. What is happening right now, then? Everything doesn't seem to fit together. A shocking tweet may provide light on an intriguing phenomena and explain the seemingly conflicting market behavior. The tweet claims that the current trend in Bitcoin holdings is from 0 to 10 Bitcoin to 10 to 100 Bitcoin. It seems that some whales have changed their strategy and are now aggressively amassing Bitcoin assets, even if the market is still in a slump. Conventional thinking is challenged by this fascinating tactic. Some whales aren't selling their assets in the hopes of a price drop. Rather, they're growing their stakes in the market. They are taking a proactive stance, increasing their holding bags despite the market uncertainty, instead of selling in a hurry out of fear. Oil. When you look more closely, you can see the reasoning for this unique approach. These whales are planning for future profits by amassing cryptocurrency assets while prices are low. They are aware of the pattern whereby cryptocurrency values have traditionally soared after Bitcoin halving occurrences. Simply put, these whales are planning ahead for what may be a post-halving market frenzy. Rather, they aren't going to let themselves be discouraged by temporary swings in the market. Instead, they're going to take advantage of the cyclical nature of the cryptocurrency industry to be ready for the next boom. Institutional actors in the cryptocurrency market are demonstrating their intelligence and vision via this deliberate amassing of assets. Whales have a better grasp of market dynamics and position themselves strategically for long-term success, whereas regular investors are more susceptible to short-term swings and market emotion. The lesson here is that institutional participants often have a better plan and vision for navigating stormy seas, unlike ordinary investors who may freak out in the face of market turbulence. The Shiba Inu, nevertheless, deserves our undivided attention. What are the Shiba Inu's value after Bitcoin? I bet you're curious. Many investors have been wondering this, particularly in light of the recent market volatility. Plus, you never know, the answer could shock you. A bullish forecast for Shiba Inu has been issued by CoinCodex, a prominent on-chain metrics and price prediction service. They calculated that after the Bitcoin halving, Shiba Inu might see a meteoric surge of up to 225%. According to this prediction, the Shiba Inu might not only break the old record, but also set new records, perhaps even breaking the 4 zeros -9 level. This forecast may be reason for celebration for investors who have stuck with Shiba Inu through thick and thin. The idea of eventually breaching Shiba Inu's all-time high, which has evaded the token for over 2.5 years, is undeniably a positive development after surviving a protracted period of stagnation and instability. Nevertheless, one must use some care when dealing with such predictions. Optimistic predictions, however exciting and reassuring to investors, should be seen as possibilities rather than assurances. There are a lot of moving parts in the cryptocurrency market, and price changes may be influenced by things like market mood, new regulations, and overall economic trends. However, for those who have stuck with the token because they believe in its long-term potential, the post-halving performance estimate for Shiba Inu gives us some optimism. So, what are your thoughts on the matter? Leave a comment below. I'd love to hear your thoughts on the matter. The date is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.